Hello and welcome to another accounting tutorial where today we'll be covering the topic of accruals and more specifically accrued expenses. So what I want to do is introduce you to the accruals concept, what it is and how we record them within our accounts. The accruals concept in itself is quite straightforward. We're making sure as a business that we're matching the revenue or expenditure with the correct period. So unlike cash accounting where we record the transaction when the money is physically paid or received, in accruals accounting we're recording the transaction when the goods or services were acquired or took place. Now let's look at an accrued expense in more detail. What is an accrued expense? So an accrued expense occurs when the business has received goods or services before the end of the period, but hasn't yet been invoiced by the supplier. Let's take a look at an example. Business A's financial year runs from January through to the end of December and has paid rent of £1,000 per month from January through to November. At the end of December, they haven't received the invoice for the month's rent. Now, when preparing the accounts, they would need to accrue, that is to add in the December amount, because they've had the service, in this case, they've occupied the building for the period of December. So just because they haven't received the invoice doesn't mean that they leave it out of the accounts, because in theory, the rent expense for the year would be too low. Within the financial accounts, an accrued expense is added to the expense account, therefore increasing the value of the account. They are then shown as a current liability in the statement of financial position. This is to represent the amount still owed to the supplier. The reason for dealing with accruals in this way is to ensure that the profit or loss records the expense that has been incurred for the year instead of simply the amount that has been paid. We now need to look at how to record an accrued expense. The double entry, therefore, to record an accrued expense is to debit the relevant expense account, increasing the balance, and credit the accrued expense account to increase the business's liabilities. Now let's put this into an example scenario. The trial balance of ABC Limited as at the 31st of December 2023 shows a debit balance for electricity expense of £3,600. This relates to the electricity provided from the 1st of January 23 through to the 30th of September 23. Quarter 4 has not yet been accounted for. So you can see here that we have a problem. No expenses have been recorded for the last quarter of 2023 in relation to electricity. Let's have a look at how we record this in our accounts. Firstly, let's start off by looking at our accounts before any adjustments are made. We can see there's currently a balance of £3,600 within the electricity expense account. There's also a nil balance within the accrued expenses. The next step is to record the accrued expense within our accounts. We know that the £3,600 recorded in electricity expenses relates to January through to the end of September. We can therefore divide this by the 9 months to get the monthly amount of £400. As the business is missing amounts for October, November and December, we multiply our monthly amount by 3 to get the amount that needs to be accrued, which is therefore £1,200. We then debit the electricity expense by the accrual amount of £1,200 and credit the accrued expenses account for £1,200. At this point, we've successfully entered our accrual within our accounts, and we now need to look at closing off our accounts as part of the year-end process. To do this, we transfer the balance on the electricity expense to the profit or loss. In this example, that would be the current balance of £3,600 plus the accrued expense of £1,200, giving us a total of £4,800. We then credit this to the electricity expense account, bringing the balance to zero, ready for the new year, and debit the profit or loss to show the electricity expense for the year. Within the accrued expenses, we simply need to balance off the account, which will be brought down into the next period. So how will this look in the new financial year? At the start of the next financial year, the accrual is reversed. To do this, we credit the electricity expense for £1,200 and debit the accrued expenses for £1,200. The effect of this is that we have a nil balance on our accrued expenses account and a £1,200 credit balance on our electricity expense. So at this point, the accrued expense account is nicely tied off, and we no longer have anything to do on this. The final step is to look at what happens to our electricity expense account and examine why we have a credit balance of £1,200 on there. Now let's say, for example, that on the 16th of Jan 24, so at the start of the new year, the invoice is paid by bank transfer. Now we'd record this as a debit in our electricity expense and a credit to our bank account. You can see that the effect of this is that we end up with a nil balance on our electricity expense within the new year. This is exactly what we want because the £1,200 bill related to our previous financial year, and therefore we don't want this showing as an expense on the profit or loss in 2024. The final part I'd like to show you here is how this would look in an extended trial balance. So using our previous example, we can see that the electricity expense has an existing balance of £3,600. We then enter the accrual within the adjustments column to show the increase to the electricity account. We then enter it in the credit side of the adjustments column to show the accrual amount. The existing balance plus the adjustment is then transferred to the profit or loss, and the accrued expense is shown as a liability within the statement of financial position. And that wraps up this video. I really hope you found this useful, and if you did, hit that like button and subscribe to the channel for more accounting videos. Thanks again for watching. I'll catch you in the next one.